Hello, welcome back. AMD is a company that a lot of people are taking a look at and they are very curious about what it's doing, understandably. It's a very trendy stock right now and trending actually in the markets today. Very old IPO. And I have made a video about it about maybe 5 weeks ago or so. But people keep asking me about this company, and so I have to create new and updated versions of the analysis because new things happen and the stock price goes goes sideways, goes down, goes up. But also, some people haven't been here before, and they are looking at for a more recent analysis, which is what we're going to be doing. Now I kind of want to take a look at what's happening with the stock news of the company. You will see here that there are some price target reductions hitting the semiconductor industry, and then some generic articles talking about either selling or buying the stock below 100, but the usual stuff. Let's take a look at the social trends, what's going on Twitter and stock tweets. Okay, so it's a little bit down on Twitter today, but the stock tweets is the one that I pay more attention to, because it's about single stocks and it's actually all about stocks. And so, yeah, there's a little bit of an increase in activity there. But the next thing is taking a look at the actual analysis and examining the company and the stock and see whether it's a worthwhile purchase at this level. Okay, so advanced micro devices here, that's the last 1 month chart, as you'll see. And yeah, this is a semiconductors company, 151 billion, that's quite hefty. And you will see here, if we take a look at let's go take a look at the max chart that we have, you will see that it has been growing very nicely. It had some years where it went higher and higher. Over here it was 41.91 and 38.67. Pretty perfect resistance levels here for the most part. Then it broke resistance over here and then started climbing. It reached 100 and actually 64 is the highest, and this is 43% down today because it's 93 over here. So we have a pretty important drop. In the 3-year chart though, it has been climbing, and then same story, kind of going down a little bit. And if we take a look at the 1-year chart, also kind of climbing and then going down. All right, let's take a look at the financials though, because the price has been going down, but is it a worthwhile purchase now? A P ratio of 36.2, a pretty hefty one, a little bit expensive. Now that's definitely not a reason to buy or sell or not buy, but it's important to at least know about it, and also very close to the price to free cash flow ratio, which means that earnings probably move similarly to the free cash flow, which is a good thing. Now, outstanding shares, this is terrible because the company is issuing shares hand over fist over here. So there's a lot of extra shares. This was less than $1 billion and now it's 1.7 billion almost, 1.6 billion and a little bit more. So 70%, 71% increase, that's massive. Massive increase, which I understand from the board because they wanted to fund their operations. Massive increase in stock price, so they wanted to make money out of it, but not great for investors. They are making good free cash flow compared to the total liabilities and good growth levels here. That's very good stuff over here for the company. Very good stuff. And also total equity growth increasing because I'm pretty sure of the outstanding shares, and also the company's profitability, to be fair. Small debt to equity ratio, low 1, because the company doesn't have a lot of debt compared to equity. And pretty high price to book ratio, but this is something that I don't necessarily pay too much attention to, unless we're talking about financial companies. Great return on equity. Very good return on equity here. That's a great number. This actually could actually inspire me to pay a little bit more, a little bit of a premium for the company, because it's getting great returns on the equity deployed. Okay, so let's take a look at the financial statements a little bit. And the revenue has been increasing. The gross profit increasing as well. Very nice. And the net income increasing massively from losing a little bit of money to making 3.1 billion. Yeah, the company is doing great in terms of the financials over here. Very good stuff. And the total current assets also increasing. But what about the bottom line? So total assets to 12 billion, 5 billion total liabilities, 7.4 from 500, 600 almost. What about this is the extra shares here. The extra shares that were sold. So they funded their operations with a lot of, or their assets I should say, with a lot of extra money from issuing shares. You'll see that the 70% paid dividends here. Okay, so yeah, they did make quite some extra equity here from this one. That makes some sense, but it's again not great for an investor who has invested in the in the older days. Although they seem to be doing well, so no worries for the most part. But you need to take these things into account. Now the net cash provided by operating activities here also increasing. A little bit of depreciation, amortization, stock-based compensation here for the most part. Yeah, that's normal, very, very normal. And net cash increasing pretty much for operating activities. And the investing cash flow is in the negative, which is a good thing because they're purchasing investments. Good stuff, a little bit of capital expenditure, not much. And financing activities also negative here. Very nice because the company is actually repurchasing some stock now. Very interesting. As it's going down and they seem to be repurchasing right now. So let's see if it's actually cheap or not later. Very interesting. The free cash flow here also increasing nicely as we saw with the revenue. Good stuff so far. Now the moment of truth, the stock evaluation tool, because the company is doing great, but is the price great for us to pay today? So the revenue growth of the company for the most part is pretty good. We're gonna go 13, 15 and 17, maybe a little bit much, but okay. Net income margins over here, net income margin 5, 5, 25, 19. I'm gonna go 5, 7 and 9. The free cash flow margin for the most part 80, 100, 136. I'm gonna go 80, 90 and 100. And an annual return of 13% is what I typically want to be making out of a single stock. I can buy an ETF and make 10% a year from the S&P alone. So I'm taking more risk here, so I need more money to make every year. And as you'll see here, the current price is much, much more expensive than what we'd like it to be. That's the big problem with AMD. It's a fantastic company that's trading at a very, very high value. And this is problematic because if we buy today, we're actually really, really overpaying for the stock. Even at this pretty substantial revenue growth, their net income margins are not great, as you'll see here. Apart from 2020 and 21, they haven't been that great, not so great. And yeah, they're making some good return on investment, really, and that's a good thing. So you may be willing to pay a little bit more for it. And yeah, maybe I would be willing to pay like this 25 or maybe even 30, or if I was feeling luxurious that day. But 93 is way out of my range. I wouldn't buying AMD right now. I wouldn't be buying AMD right now. I think Intel was a much cheaper stock right now. I will probably make a video about it. But AMD, fantastic company, doing better and better. Expensive stock though. So be a little bit cautious about it. Let me know what you think about this company. Leave a comment below and remember to like the video and subscribe. Very soon I will be giving you access to this tool if you're around, so you may want to subscribe to get the news first. Be one of the first people to know. And thank you for watching this video. If you did like what you saw, you may want to take a look at this other video that I made earlier and discusses TSM, a Taiwanese company that's very, very interesting. Thank you for watching this one and I'll see you very, very soon. Bye bye.